What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today we want to talk about smart money concepts, and we are going to do a comprehensive explanation of smart money concepts. If you have never heard about smart money concepts, after this video you will be able to explain it to all your friends, your family, anyone who would want to listen. So guys, today we're going to explain what you need to know, and we're going to talk about concepts such as order flow, liquidity, market structure, and how to get entries. And I'm going to explain 3 setups that are most important in smart money concepts. So first of all, we're going to explain how the market moves in the smart money concepts way. So what we are talking about is the smart money concepts explains that the market moves through a mitigation. What do I mean by that? After price moves away, right, it forms either supply or demand depending on the direction that price is taking. So let's take for example, if price moves from this point here to this point, okay, let me just change the color of my lines there so that you can see. So if price moves from the top here to this particular point, you know that it has left supply here, and it has gone down. So what has just happened, this displacement means that the suppliers or the supply is stronger than the demand, which means the sellers are overpowering the buyers. That's why price is dropping, and it leaves a clue, or it leaves a supply zone where the whole move would have started. So this is how you move. So if you mark, or if you look at a chart and see continuous supply on a chart and continuous break of demand, you will have to know that order flow is in the bearish direction. So we will conclude that we have bearish order flow in a situation like that from what you are seeing there. So what do you need to do? What you need to do is to identify unmitigated supply zones and unmitigated demand zones, so that you can be able to trade off those when price retraces back to those zones, right? So when price breaks a low, as you can see here, and forms a supply zone, this supply zone is not mitigated until it's retested, right? So when price then moves and retests this supply zone, then we can call this supply zone a mitigated supply zone. So this is the premise of mitigation in smart money concepts. And when we go to the concept of order flow, we are now saying, what is the market doing? What is the overall outlook of the market in terms of price, right? So price its story through the order blocks or the demand and supply zones that you are seeing. So in this example here, we see a series of supply zones, a series of supply zones. So these supply zones detect that we have a bearish order flow. And if you go to the flip side, you can clearly see that after this move, right? So this was the supply zone that was not mitigated after this move down. So I want you to see what price then does. Price moves away and breaks this supply zone. So when a supply zone is taken out like this, it means that we are anticipating a change of order flow, where we are starting to see a series of demand zones as price is going up, you see a series of demand zones. And this is what you want to be seeing in terms of analyzing your order flow. So remember, here we are not yet talking about entering trades or anything. We are just identifying order flow and identifying the direction of price. We are just using order flow, right? After that, we want to use what you call market structure. So you might be asking yourself what market structure is. I have a perfect example here where you see price going down and price retracing up and going down again, retracing up, and things like that. So this is so what is market structure, and what does market structure show? So market structure will show you a lot of things. I'll just name a few. It will show you liquidity, right? That's number one. It will show you liquidity. It will show you points of interest, and it will show you direction. So how do you do that? You are going to understand that you have higher highs and lower lows, and you have lower highs and higher lows if you are looking at it. So if it's a downtrend, this is a high and this is a lower high, lower high, lower high, and these on the downside are what? Are lower lows, lower lows, lower lows. It's a rule of thumb that higher highs are formed in a what? In an uptrend, right? And lower lows are formed in a what? In a downtrend. So that's now market structure. So what does market structure show you? It shows you the swing points which you can use to identify your what? Your liquidity. So number one, what do you see here? We might be having what? Liquidity there because it's a high, right? Liquidity there because it's a high. And I want you to get that if you see a lot of highs at a certain point, the probability of that liquidity being taken out is very high, or the probability of price going where price is retested a lot of times is what? Is very high. So that's what we are doing. We want to understand and to identify areas where price is just retested many times, like what you see in this area here, where you are seeing price retesting, I think more than 3 times there. So these areas are most likely to be taken out, and it means that we have a lot of liquidity. When we say liquidity, it's just a fancy term addressing what stops, right? We're saying there are stop losses, we take profits, we have stop orders and things like that. So that's liquidity. And if you see a lot of pins to one area, you know that you have a lot of those things at that particular point. So that's what market structure can show you again. So liquidity works as a magnet to price, and after that it shows you what we call points of interest. So when we are into a smart money concept, there's what we call points of interest, right? So what are points of interest? You might be asking yourself. Points of interest, we are looking at zones where price can react, right? It can break, it can retest, it can do anything at those areas. So those are points of interest, and we're talking about things like fair value gaps, like what you are seeing in this area. This is a fair value gap where price just came here and retested that gap and went and took out buy side liquidity there, and you can clearly see that this was a very good area and it was retested many times, and this would work as a magnet for price. As you can see, that price retested a fair value gap in this area and went and took out all that liquidity that was resting at this area. So we are looking at order blocks again. So what is an order block? An order block is a refined supply or demand area, right? So if you see one candlestick as this, right, these are refined supply and demand areas. And in this case, we have marked a refined supply area where we are seeing price retesting to that area and reacting off that particular area. So this is what we are doing, and this is what we want to be doing when we are looking at smart money concept. So I just told you 2 points of interest, right? And I've just explained liquidity, market structure, and order block and order flow to you in terms of a smart money concept. So what we want to do now is we want to look at the most popular or the most accurate setups that you can find in smart money concept. So the first setup that we are going to do is the order block. You guessed it right. We are going to do the order block. So what is an order block? I might have told you that an order block is a refined demand area. So what do you need to see? Remember, when we were talking about market structure, we're talking about order flow, right? We understood that when we have an unmitigated supply, like in this area, right? We have an unmitigated supply. When price breaks that, it signifies a change of a change of trend or a change of bias, right? So after that, we start to understand that if we have a break of an unmitigated supply, we look where that move would have initiated from, or what we call a source, and we mark the last opposite candlestick, and that would be your order block. As price breaks more of these things, we mark more of order blocks, and you look, this is the last opposite candle that is closer to the low, as you can see. So this being your order block, price goes up, breaks a high like this, and price comes back and retests your order block. So this is your setup number one. If you had to enter this trade, you would put your buy orders there, and you'd put your stop losses below this pin there, and you would put your take profit at this particular point. So this is a setup number one that you need to understand when you are looking at smart money concepts, and you are looking with these points of interest in question. So number two, we're going to look at another setup that is called order block in order block. So this is just a fancy term of of understanding the refinement of an order block, right? We are on the H4 right now, and we have an order block that we have marked here. And this order block is too huge for a what? For a stop loss, or for us to risk using that order block. So to reduce the risk, we refine that order block. So what do? We go to a lower time frame like the H1 and try to find an order block inside this particular order block. So let's do that and see. So this is the H1, and this is the same area that we are looking for. So what do you see here? You see this yellow zone is the whole order block from the H4. So you want to find an order block inside this yellow zone, and you can clearly see that we have this candlestick that is in this area. So you would delete the order block from the H4 and use this one from the H1 to understand your entries and to kind of refine your stop loss. So you would not be involved in this first move, and you would be involved in this one and go for this one, for these highs there. And you might be asking yourself why we didn't use these order blocks in these areas or so, but the reason is simple. These order blocks are liquidity. Why? Because most of the guys will be entering there before or not knowing H4 direction or the higher time frame direction, and not knowing that we have an extreme order block in this area. So another rule of thumb, if you are looking at order blocks, you have to take the extreme order blocks in an area and use those to your advantage. So this is what you are doing, and this is how you want to be looking at it and go from there. So this is the order block in order block setup. So, and the next setup that we are going to be doing is the fair value gap. We are going to understand how to get involved with the fair value gap and how you can take advantage of a fair value gap. So the rule of thumb with fair value gaps is they work as magnets to price, and it's a 3 candle formation, right? So what is a fair value gap? A fair value gap is a gap that price moves when it is expanding from an area of demand or supply. So let's say this is an area of demand, right? Price moves away, breaks a high. It leaves gaps, and those gaps are understood when you look at 3 candles. So you see this first candle, this second candle, and this last candle. So you look at the wicks of the first and the last candle, right? If those wicks leave a gap, so that gap is what we are calling a fair value gap. So you see this gap in between these two lines, that's your fair value gap. So how does this work? I like to use it. So some guys like to use it as a retest mechanism, right? I like to use it as a magnet that draws price to an order block that is below it if you want to buy, and to an order block that is above it when you want to sell. So this is the simple explanation that I can give you. So remember, we have an order block down here that we have marked here. So remember, we're on the H4, but this order block that is in yellow is from the H1, and we have a fair value gap on H4. So it just means that this fair value gap will draw price to itself, then price will go on, fill that gap, and retest an order block that is below it. And what you need to do is to trade from the order block here and get your trade going like that. And you have to understand you are using a fair value gap that way, and you don't need to confuse yourself, and you don't need to listen to anyone if this works for you. If it doesn't work for you, if it works for you the other way, the retest way, then use that. What you need to do is to make money. This is what I wanted to show you on smart money concepts, guys. I hope this was helpful, and I hope to see you in the next video. Cheers out, Shocks.